Good day, all. Ira Epstein of Linn & Associates with your metal market wrap-up for this Monday, and we're now at the 22nd of February, 2021, and the time right now, about 6:10 p.m. Central Time. So we have a mixed reopening in the stock market. The NASDAQ was weak today, and it's continuing weak, along with the S&P, which is stalled out. In the gold market, we're just back over the 1800 level, and the market's content for the moment to sit there, which is a good thing. By the way, in copper, we got over the 420 level, and then it dropped 10 cents. Now, for the uninitiated, that's a $2,500 move in copper. Folks, that's not normal. Copper is typically a market that doesn't move anything like that, but as it goes higher and higher, you got to watch out. For those of you that work on construction sites, I'm telling you, that copper is like gold right now. People are going to be out stealing anything in copper. I hate to say it because the scrap and what it's worth, it's a lot of money all of a sudden. This was $260 a pound just recently. Now it's taken off. In Bitcoin, you got up towards that 58,000 level, and you gave a lot up. You're down 400 tonight at 5330, but that 50,000 mark is still a good number. This is just a dramatic move. Bonds and notes getting a bit of a bounce for a change. So, if we could, let's go take a look at gold on a weekly basis. It is still under the 18-week average of closes. That means the bias of the market is down. When we come at a chart, we can see that we have these plateaus that the market seems to hit, and then it gets a bounce. We came down to the most recent lows of 1755. We're getting a bounce on the indicator. The trend is still down because you have a pattern of lower highs on the swing line with lower lows. The resistance begins at 1850, the 18-day moving average of closes, and now we've had another bearish setup actually. Do you notice that the 100-day has just gotten under the 200-day average? So for the bears in the market, moving average bears that is, you now have the 18 under the 100 under the 200. It's a bearish setup on the charts. Again, the market held the lower Bollinger Band after penetrating it over the past 3 days. It finally got a good bounce out of the marketplace. That's what you'd expect, but nothing has changed the pattern here. Still bearish with resistance 18 and a half, and we've had a correction out of an oversold market that never did embed. In the gold-silver ratio, still in favor of the silver by a big number. You do realize back here, we actually had gotten up as high as into the 127 zone overall, and look at how much it has given back now. As you take a look at silver, the silver market didn't want to make it after the fact to the lower Bollinger Band of the 100-day average. Rather, it was content to get this drop into the 18-day average, not close under. That kept the bias up and got a nice spurt to the upside. If you think trading this is easy, you are so wrong. That is a very difficult trade for a lot of people because you're looking for trends and you don't have them. You're just spinning around there. The market that's been on a one-way mission has been the copper market. Once it came out of the narrowness of this long sideways action and broke out to the upside, it was game over. Now, we've had 3 days in a row over the upper Bollinger Band. It's time to pull back a little bit. That's what I would think. There's a way that the pros will look at it. I wouldn't be surprised if near that $4 level they start viewing, if the market keeps the embedded reading, that maybe that's the support area. In the platinum market, too overbought. My eye goes there immediately. I see an overbought market that's had a run. I let somebody else have that. The market broke out, just like copper, out of this sideways action, had its thrust, and now the market is sputtering. It's not embedding. It's just sort of hanging here. It either embeds, or to correct that, you generally get some down action. So be a bit cautious. I'm not bearish, by the way. Let me go back to that. Why am I not bearish? Because you're over the 18-day average and the swing line is up. It's just that I don't see the market with that overbought condition wanting to attract a lot of new buyers. I could be very wrong on that. I don't see a reason to be bearish, no reason to buy it up there, but I am, if you just looking at the market, more friendly than not. In the palladium market, you had this swing to the downside that ended today when you got over this high. So now you're just, again, just like the platinum, you're overbought, just hanging here, not wanting to get under that 18-day average, just sort of going sideways. In a nutshell, I think the metal markets are bullish. I think that they're looking at increases around the world of economic activity, and as a group, they're looking pretty darn good. Imagine what happens when people start going out, buying new cars. They're going to need catalytic converters, and as much as we hear that platinum and palladium, oh, that's dead because of electric vehicles are still this big of the market. They'll become bigger, and that's a reason that copper market is on fire too. A lot of it for the use in electrical systems and all this. Last in the dollar index, you talk about whipsaw markets. You had this breach to the downside, never did hit the final numbers, got oversold, rallied during that period, and just collapsed on you again. Not trending in any manner, staying within these confines of the upper, basically the lower Bollinger Band, trading either side of the 18-day average and not giving traders a trend trade. That becomes a difficult scenario. When I see those type of scenarios sometimes, I turn on my pivot points. If I see a big rally in the market, I want to know where the first and second sell spots are based on this formula that is very popular in pivot points. I believe, it's my own belief, that algorithms look at this as well. And they're looking for the resistance support zones from the previous day's range. This is primarily a day trading in and out trade, but that's what the algos do all day. They're really looking at markets up and down. I tie it with the momentum of the slow stochastics, and in a free series, the word is free, I let you work with that. So if you'd like to get this, just go to our website under free offers. You can get this and our other offerings. Bring you up to date. I worked all weekend on my enhanced Bollinger Band series. I added SLV, so I've got an ETF and 2 futures contracts. I've finished the buy side. I'm on the sell side of a number of markets, and then we move further from there. So you'll hear more about that. I'm praying I can get it done this week. If not, it's next week, but I'm there for all purposes. We'll see when the release date's going to come. Got a little bit of editing, not that much, but more recording. I'm Ira Epstein. You have a good day. I will talk to you all tomorrow.